Welcome back to another episode of the Backholder Pod. So I think specifically today, we're going to discuss a little bit more about the ideology of portfolio allocation. So we have seen, I think, over the last few years, where some influencers have been gaining a lot of fame by touting or making very clicky titles, saying that they're 100% all in a particular stock or a particular company, etc., etc. So I think we just wanted to extend this discussion a little bit further on whether this is prudent and whether this makes sense to a particular investor to basically spend a lot of time studying a company, looking at it from an asymmetry perspective, and think that, hey, this is an opportunity of a lifetime. I'll just whack one times good one. So I think I just wanted to extend the discussion to see what you guys think about individuals going 100% all in. So maybe we'll open the discussion first. I think if to provide some context, right? Specifically for individual investors that do our own stock picking, right? I believe me and Kelvin is the closer one towards to 100%, meaning having a very big outsized position in a particular stock. So maybe I'll get Kelvin to begin or kickstart the discussion. Kelvin, what do you think? Is it risky or not?
Okay, for context, my Tesla holdings is now 50% of my portfolio, down from 80%, thanks to the stock going down. Plus, I was busy throwing into other stocks that like SPY ETF, other tech stocks and stuff. So this is more or less like a legacy thing. I think if I were to restart this whole thing, I wouldn't have did it that way, but that was how I ended up that way. As to whether it's risky or not, I think there's actually two risks, right? One risk is what you can control, so what you can allocate into your investments. The other risk is that what you can't control, like for example Tesla. Like today we saw the judge denying Elon his pay. So that risk you can't control. So if Elon decides to go haywire and he's like, oh, I'm going to cancel FSD today, you see, you're going to see the stock drop by easily 50%. So so diversification, I guess, is a hedge against that lah. Yeah, so that's my thought lah.
So you wouldn't do it again if you were to restart?
I would do it the safer way lah. So start with like, the core satellite portfolio thing. Start with like maybe VWRA as the base, then start adding in the rest lor. Instead of right now the other way around. That's why I call Kevin learns investing ma. I learned along the way.
Interesting. Bunti?
Okay, well, my portfolio always diversified one. And I'm not like super strong advocate say that you must like diversify and then cannot hold like more than 20% in one stock, right? I'm not like that. I'm just thinking that let's say if you put on too much money into one company's, okay, it also depends on the situation. Let's say you are, in your 20s and then you only have 10K, 5K to invest. You want to put 100% into one company, I think that's fine. But the moment you have like, like 6-digit investment, 7-digit, then you want to put in one company or one single investment, I think that's just too risky. What if something goes wrong and then your portfolio totally wipe out? And how long will it take for you to rebuild again, right? So that's my concern. And I want to say that, let's say if the portfolio become concentrated because of the results, right? Say, for example, I start with, let's say, 10 positions, 10% each, right? Then after 10 years, only one company's 10x, then the rest all, down by 80, 90%, right? Then it concentrate naturally. I think that one is fine to me. Yeah, it depends on the situations, circumstances.
So on that note, meaning you wouldn't rebalance actively if your position grow very naturally.
Yeah.
Okay. So right now, if your NVIDIA goes to like 99%, you will just keep holding.
That one, okay. I would say I would may rebalance. Let's say if the
why are you hedging both ways?
I think that one, okay. On how to say, on theory part, right? Is like don't do that because you want to avoid selling the winners, right? And you want to avoid selling too early. But when it comes to psychology, right, actually very hard to say, okay, 99% already, now NVIDIA down means my whole portfolio down. So I'll be very concerned when it hit that such a high percentage. But so far, my NVIDIA only go up to 10+%. So even if you go to 20, 30%, I'm still fine. I can assure you I won't sell anything below, let's say, 40%. Yeah.
I think the thought behind trying to trying to allocate so concentrate, like having such a concentrated position is really the idea behind high risk, high reward, right? So there's this, I think, new term that came out like 2, 3 years ago that was quite popular on YouTube. I've forgotten who popularized it. There's this theory called sniper theory, right? So basically, you spend a lot of time, you aim at a target for very long, and then you one shot, one kill. So I think that's the perspective where you concentrate your bet when it get outsized returns, then your portfolio really grow by a large extent. I think just wanted to hear Eric's perspective on this and how you allocate your portfolio.
Yeah, I remember the sniper theory kind of era because I invested in Tesla because of that kind of theory. Yeah, so I went like quite a big position. Of course, I have since grown out of it. My portfolio has other aspects now, but looking back, I understand what was the rationale because of this another term called life-changing money, right? Because they say, hey, you diversify, then you're not gonna, even if you're one of your holdings, right, like Nvidia double 3x, then if your initial is like 10K, so 3x is 30K. It's like not life-changing money. Like you buy one Rolex, then that's it. There goes all your winnings. So yeah, so there's this idea if you're small, right? Small as in it's relative to different people, right? But generally speaking, if it's less than like 6 digits, like 10 plus K, 20, 30K, I think there's a room for you to go all in if you've done a lot of research. Like, because if you lose it, it won't cripple you. Yeah, and especially if you're younger. That's why I told you it was during my a bit younger days, right? A bit younger. I was a bit younger, then I was thinking like, yeah, just hack it lah, just whack lah. After that, I not I don't really recommend this method because I think that Bunti's method maybe works better over the long term lah. Maybe a lot more companies or spread into different assets. Yeah, so that's the approach that I'm taking now lah. Spread more into different assets, go into property, like buy other things. And the stock portfolio you can concentrate in a few bets, but don't all in. That's my take.
Yeah, this sniper theory, I think it sounds very nice, very, wow, concentrate, like one winner enough already, set already your retirement. Sounds very nice, but I think um not everyone can take that. I'll say that every one of us, right, need to know like where's your sleeping level. Like if you own too much of a company and you cannot sleep, right? That one is like really you have done your financial planning all, in the wrong way already. But there will be people who are so, having such a high conviction that if they don't all in, they cannot sleep, right? Then I think they should go all in. So you need to follow your own feelings. Yeah.
Eric, you haven't disclosed, sorry, before Kelvin, Eric, you haven't disclosed what's your allocation, like the most concentrated position for
Yeah,
context.
Tesla, no, I think
Percentage?
stocks wise, I think it's 30 over. I didn't actually track. I think it recently would have gone down a bit more. Like it used to be 30 something. I'm not sure now because recently, right, crash another 30%. Then I'm like, okay. So I don't actively track the percentage lah in the equity portfolio. Yeah.
Okay, Kelvin?
What about Jiking? What's your Baba thing?
So actually I'm of the opposite camp of all three of them. So maybe because of by the nature of the age group and the people that I interact with and the natural flow of things, right? So for context, my Baba now is around 40%. Actually even lower than Kelvin. Purely because my portfolio is smaller. So it's easier to move the portfolio compared to Kelvin. Like if you're running a few 100,000, you need to keep adding a lot of money for them to push the allocation down. So let me explain the other perspective on why I'm not endorsing this strategy. I'm just helping the other group of people express their opinion. So I actually do have a group of friends that are quite, I would say, very interested and have a lot of passion in the crypto space, right? So we believe that in crypto, in stocks, right, you have a multi-bagger, you actually, wow, I think very zai already. Wow, you can 3x, 4x. In crypto world, they talk about 10x, 100x. So the perspective really is they just have to win it big one time. right? You 100x, even when you think about the quantum of 100xing, right? Even putting in 5K, right? You 100x will become 500. You can buy one HDB already, as in one 4 5 room HDB lah, right? So the logic is I can make multiple bets of $5,000 and using the Bunti style, the VC approach, you spray and pray, you hit you do 10 altcoins or something, one hit like don't need 100x, maybe even 50x. I think you're good to go. So that's the underlying fundamental logic of this spray and pray and going to the crypto, having high volatility and doing it fast. But personally, for me, I don't really engage in that, so I have zero crypto exposure. But that said, when I started out, when I was a lot younger, I think when I just turned 20, I really also believe in the sniper theory because we all know that we don't have unlimited time. So a lot of the time that we spend researching, the perspective is you want to make it big, ma. You want to make your time worth. If not, you might as well go and work part-time at McDonald's and earn like $12 per hour if it doesn't make it. However, the flip side is I've came to realize after 3 years is people always need to be humble. Sometimes you work at McDonald's $12 per hour, right? It's better than losing $12 per hour after doing so much research and putting in so much money. So here comes the idea of portfolio diversification. To me, now very simple. If you're just starting out and the amount of money that you're putting into the markets relative to your earnings potential or earnings, your expected income, lah, because you can kind of project. If it's 1 year, you can earn back 1 or 2 years of your income with your portfolio, which is a keyword that Eric said, which is won't cripple you. I think if you're happy, you make your own assessment, then so be it. You are taking a bet. If not, if it starts going up scarier and scarier, meaning it goes up 4 years, 5 years of your income, then I think that's when more prudent approach needs to be taken. You can't keep living and thinking that, oh, you only live once and you're young. Especially so when you have more responsibilities and stuff like that. So that's just my general take on that. If you're younger, you can afford to take more risks. Whether you want to 3K, 5K, all into all these altcoins, like you choose 10 project or put 3K, up to you. But I guess that's just my own personal reflection after a few years
I got one point to add, right? I think one of the things that guys, especially guys, we really enjoy, right, is to tuakang.
What does it mean?
Tuakang means that you can brag lah. Like if you sniper theory and then you do 3x, then after that you sell, take out your money, and you put in another stock, then you do 3x again, or even 5x, and then you take that profit and then you put another stock, then you 10x again. Wow, then you have the sun kind of aura, you see, you have the bragging, right? Like, hey, I 100x my money, 2x here, 3x here, 5x here, times all together 100x. What's your return? Have fun staying poor, yeah. So it's a kind of is to make a point and to also like 画大饼 like really, one up you like, oh, you do this you got 1 million in CPF I got 10 million outside CPF wow, jialat. Don't know how to manage also. Maybe you can help me. Yeah, so you just go to a Telegram chat and like one up everybody, like, oh, you got 10 million. Oh, I see. Yeah, I also got 10 million parked somewhere lah. I also forgot where. That kind of thing. So it's Bunty, you agree, right? Guys like to make a point, right? Like, I'm better than you kind of thing.
Yeah, definitely. I think that there's definitely element of that. People want to say, imagine like let's say I do all the right thing according to textbook. Okay, I just DCA every month, go and buy VWRA, diversified whole world, have a good good enough cash buffer, put in CPF. Then what to tell your friends when you meet up with your friends? Hey, Eric, how do you do your investment? Or I'm just, like DCA. DCA what? Then DCA all this, SPY. So boring, right? So sometimes you have like a couple of all these companies, especially the high profile one, especially those that went out, like 2x, 3x, then you can brag about it. I think definitely true. And especially among guys. Yeah. I also like to brag about it, to be honest. That's why we all have some social channel to brag about it, right? Because you brag with your friends and then actually your friends not so interested on. So we have no choice but come to YouTube.
I think the other thing is, okay, let's zoom this out a bit more, right? So I think we can agree that so by buying just one stock is not diversifying is a bad thing. But what if you just buy into the S&P 500? Is that bad or is that good?
Yeah. That's not one investment really, right? That's like many,
But you are
many
still like
companies.
regionally concentrated, right? So the question is like, what happens to the US? So all your
Happen to
investments
US,
will
okay.
go.
US in the past can drop, like 30, 40, 50, 60%, right? But they never close down, right? But China cannot, China closed down before.
I think this is like what's called recency bias or something like that. So the S&P 500, if you just look at past 100 years ago, it was the UK market that was a lot bigger, right? US market wasn't that good back then. So if you back then, you would say, oh, let's all in into UK markets. Then if you look at around, I think 1990, around that period, it was the China market that was doing well. So you say, oh, should we just all in into China market? Then now it's the US market's turn. Then, oh, now should we all in into US? So like, is it a good idea to buy S&P 500? Apparently, Warren Buffett thinks so, right? But yeah, what do you guys think?
But Buffett's 100 years was during US exceptionalism. So I don't know. I don't know the answer to this. Eric?
Like I used to think that China's era is coming up lah. The next 100 years. I think about 10 plus years ago, maybe even as recent as about 15 years ago lah, when I first started working not too long. Then there was this guy that he's selling insurance, but also selling like those kind of unit trusts. So he got me to invest in China and India, emerging market ma. So they say, oh, this developing economy is going to pick up and then they're going to take off. You look at how China is booming. They say the next one is India. He told me that in 2007. Okay, so I whacked a lot into India lah. The unit trust, all my OA all throw inside. I think about 40K or something like that. So I throw in 40K, then India proceeded to go down like 50%. I was like,
Do you
what?
paper hands?
Yeah, people
That's the problem. India now 10x in the
Yeah.
last 10 years.
So you like that kind of time frame, right? Because as a young investor, I was really very, very young. I think that time I haven't even really got into the stock market yet. 2007, like just learning about everything. So I just anyhow whack lah. So I bought that. Like no, I actually doubled down first leh. I bought the India one. I bought like 10 plus 20K, right? Then after that it dropped, don't know how many percent, 40%. Then he texts me and say, bro, this is the time, man. When there's blood on the street, you go and scoop it up. Then after that, you make back when it bounce back lah. So he talked a very convincing game. Then I like, yeah, bro, really? Really? Then I whacked another 20K. Then it went down another like 30%. Then I like, no lah, go and fly kite. So I don't consult him anymore. Then I sold out lah.
You got ask him about China now?
China.
Yeah, buy when there's blood on the street, I think there's plenty of blood on the street in Hong Kong stock market.
No lah, I think that friend is not really a friend also lah, like just an acquaintance that I met at a wedding. We just happen to be like the best man kind of group lah. Then he talked to me, then he psycho me to buy. I mean, I was young and gullible lah. I mean, I don't blame anyone, but my own foolishness. Yeah,
By the
but
way,
that time frame a bit hard to say.
By the way, if you check every single period, India compared to S&P 500, right? India actually outperformed S&P 500 for every period, 1 year, 5 year, 10 year, 20 years. Yes, so your friend was right there, actually.
Wait, no, the data point is from when? Which year
From
start?
now lah. You check
India
1
is the
now,
Nifty, right?
Nifty
Sensex, I
50 lah.
think.
Nifty 50.
Yeah, you go and check. The 2007, right? 2008, 2009, that period. Wow, cui, man.
About the same performance there. I can share a screen. Where's the share screen? See? Oh, wait. These things.
You need to take into account FX also, just saying.
Okay lah. If you take into account FS, then it won't outperform lah. But otherwise, India market is very
you look at the 2007 period, right? The period that I bought in, I don't know whether you can show the chart again. I think I bought in at a high, and then when it crashed down, right, it crashed even harder than US side. Yeah, very, very bad. I remember I lost like 60% of my CPF OA. That time to me was a lot lah, because like I just started working, I pump in for 40,000. I lost more than 60%, I think. Quite bad for me. Then yeah lor. So I don't know, like buying on what other people thinks. How many of us can wait like 14, 15 years to see
But
something happen?
but the idea of index fund is to wait, right? To wait long enough, right? It's just that a lot of people pull out halfway. That's the problem.
I waited like 1+, 2+ year already leh.
Oh, 1+2+year on an index fund. What if S&P 500? You know, actually, the interesting thing about SPY, right, was that before breaking out this all-time high, it has also went nowhere for two years. So for people that bought in the 21 highs, they had suffered a loss for 2 years or so. But usually US indexes rebound quite quickly lah. So that's a different case. So also in terms of the conviction and the body of research in emerging markets, very skeptical. A lot of people like, hey, can buy, cannot buy, can or not, this one trustworthy or not, things like that. Yeah, but Bunti.
Yeah, actually, I just want to pivot a little bit. Just now we have been talking about stocks and then single companies. Then we talk about like US as a single country, right? But this is still within stocks that we are talking about. But actually, when we talk about diversifications, I think many people miss one thing is that, okay, what about those that, like still young but want to get married and then want to buy houses? Then they just whack like all of their net worth, sell everything just all in one property, right? So I think this is quite common, and you rarely heard about people say that, wow, you all in your net worth in one house. That's like so risky. People don't have these kind of things if you are buying house, right? But buy house also, you can end up with like a very, like let's say something wrong with the development, or let's say the share not the share price, the house price also can come down, right? So you still subject to the same dynamics of like, all into single investment. But people are generally okay with that. No? So what's your take on that? Like when talk about property, are all these diversifications all we can throw away? Is that true? Or you're supportive on this kind of like advice? Yes, you can all in only for property.
I think for property, right, it's a very different game, very illiquid. So even if you feel terrible, you want to sell, it's not really an overnight thing lah. You can't click a button and it's done. Well, stocks you can lah. Stocks. Yeah, property is a bit slow. It's a slow asset. But having said that, right, I think you still feel awful if you see your property underwater. Yeah, when I bought my HDB, I think the first 4 years or so, it was kind of like at the price I bought, the valuation, or like slightly below. Like it was the period where HDB didn't do anything. No? Yeah, then after that, recently, then you'll see, right, the COVID, then it went nuts, up 30% or that 50%. But yeah, but I think property wise, people generally don't talk so much about their losses because the losses sometimes is quite painful lah.
Yeah, the idea is like you buy to stay, especially for own stay, right? Then you don't talk about it, right? But still you all in, like you don't have diversification into stocks, other bonds, you don't have anything. You just have your house. Especially for those who are young, like you are in your 30s, you just bought your first home. That is the 100% concentration for most of the people, right? Unless you're
Now,
buying house at, like for 40 plus years old, right? That's difficult. That's different story.
so now you're talking about what one of the YouTubers said, right? Like all the young people buying all the condo with their parents' money.
And some really buying condo, like, like not just 500K condo, it's like 1 million, 2 million.
No,
Actually,
no,
1
no.
million condo also cannot find, right?
Condo to at least 1.5.
Yeah, lor. Then 2 million is okay. But
Yeah, 2
whack
million is
200K
not
in single stock, not okay. Like, what's the standard here, right?
standard because property 保价 one ma. Singapore property only go up, right?
You all agree?
You all know? Kelvin, you know, Singapore property only go up.
I believe in this theory lah. I'm not sure whether it's true or not.
You can't believe it.
I don't believe in anything. I everyday also want to be skeptical. No lah, I think back I answer Bunti's question first, okay, on this all in net worth thing. I think the beautiful thing about property is that you can leverage up and still, as long as you can continue paying your mortgage, there's no issue. So even the valuation of your property can cut into half, they won't margin call you. But if you leverage in stocks, then you better be careful to have enough money to continue holding onto your position. That's the first thing. Then on the idea of whether is it 保价 or not, I think if you think about it, right, actually Singapore is like the Max 7. I mean, using a stock term lah, Singapore is like Max 7. So in the last 1 or 2 years, if you leverage in the Max 7, well, your returns will be tremendous because those were the prime real estate of the stock market. So Singapore in this case, even if you buy a very ulu place, right, as long as you go down the route of BTO, right, I think I really haven't seen anyone lost money on BTO. I'm not saying properties, but on BTO. But if you look at past transactions on condos on condos and landed, right? Private transactions, there are people that I think I saw Eric, the other Eric, there's Eric from Eric Chew, another YouTuber lah. He was talking about people losing one arm, one leg, a few $100,000 purely because of the entry price issue, entry price and location lah. So then, Singapore property not necessarily 保价. BTO, at least for now, according to data, is 保价. Because by the logic of them selling you at below market price. But that said, I think Singapore being a very prime area, prime real estate, a very prime piece of land, generally people that do their research and have proper positioning would come out ahead. That's the logic of going into property. So that's why concentrating plus leveraging onto something like that might have its benefits in a way. But I think, of course, textbook answer is please still stay diversified. Try to live below or pay within your means lah. Don't try to. If you need to take money from someone else or you need to gather funds from your friends and family, right? It's not necessarily a prudent thing to do lah. But it might warrant such a decision if need be. If you all think that you all made the assessment, it's a good investment. But yeah, I personally wouldn't do it lah. So yeah, that's just my perspective.
I think for Singapore property, right, there's a lot, right? But a lot of like young Singaporeans that think, let's invest in a condo, let's all in our income, our finances income into condo. Then they go and stress themselves until they can't even pay the mortgage loan. I do believe condo will eventually go up, but if you are staying in it, you are not renting it out. It's basically a white elephant that you are paying a ton of money for, right? Plus, it has like monthly, what is it called? The maintenance fee. Yeah, so it becomes a liability, not an investment. Then you say, oh, okay, then next time, after 10 years later, we can upgrade to a condo. Then you lock in even more money. Then the funny thing is like Singaporeans are like, oh, we don't trust the government, we don't want to lock up our CPF. Then at the same time, they're locking up all their money into the property, which is in Singapore. Aren't they doing the exact same thing? So I know the smart property investors, right? They aren't investing in a condo. They're actually investing in a commercial building, in a commercial property, industrial property. Because for like condo, the rental yield is only about 2 to 3%. If you are staying in it, it's even lower, it's basically nothing already. But for commercial, what you can do is, because you can actually avoid ABSD by setting up companies to buy the commercial properties. But for condo, you can't really do that. So yeah, so I think a lot of young people think that condo is an investment now is a huge mistake. It's more like a social status thing that's used for showing off. Oh, I got a swimming pool. Then the swimming pool you never go and use. Oh, I got a gym. Then you don't go and gym. You just stay home and you have to work your ass off just to pay the condo. In the end, you're not using the facility at all. So it's a bad thing, in my opinion.
Okay, I think throughout this discussion, when we talk about 100% all in, right, we are looking at it on a portfolio level, meaning usually I would believe someone would probably have a stock portfolio, a property portfolio, crypto, gold, whatever it is, other asset classes. So if we just specifically zoom into a stock portfolio, I think across time, we can all kind of agree that as you amass more and more capital, you kind of have the mentality that you want to play it safe. So as you grow older, your risk profile gets lower, you want to play it safe. But I think when you just start out, when you're just trying to figure out this whole stock market thing, there are a lot of people that I've seen, even around me, those that are around the 20 plus age group, they just go all in. I think nothing wrong with it. It's still a lesson that you're paying the lesson to learn from it. If you do well, good for you. But if you don't do well, I guess that's where you learn the lesson lah. But even if you did well, right? If you really think about it, if your mentality is always to go all in into one stock, and let's say you triple your capital, you start with 10K, you triple to 30K, you triple again to 90K, you triple again to 300K. When you are already at 300K, 500K range, and then you want to go all in and you lose it down again, I think that's the more dangerous and more risky thing, that because you learn the lesson a lot later. So I guess in general, there's a reason why textbook answers are textbook answers, right? So whether you want to learn it or not now or learn it later, I guess it's up to your own journey ahead. So that's just our own sharing from 4 different people in 4 different age groups. If not, I think on the HDB, the housing property, it's a very sensitive topic. You guys you guys can continue debating the comments below, but I guess if Eric is buying, might mean that property is 报价 anyway. Yeah, with that, we hope you guys enjoyed the discussion, and we'll see you guys in the next video. Goodbye.